All right, let's get right to it. The U.S. markets are closed for the weekend. As of the closing bell on Friday, October 17, 2025, shares of Sellas Life Sciences Group, ticker SLS, settled at $2.14. That was a minor slip on the day, down just 2 cents or 0.93%. But that small 2-cent move is incredibly deceptive. The immediate expectation when you see that is that this is just another sleepy, sub-$5 biotech stock drifting sideways into the weekend. The reality? That $2.14 price tag is wound tighter than a spring, and the action on Friday proves it. The trading volume was massive. Over 8 million shares changed hands. That is more than 3 times its daily average. This isn't quiet drift. This is consolidation. This is pressure building. What the market seems to be completely missing, in my view, is that while everyone is staring at one door, the massive Phase 3 GPS trial, a second, highly valuable door just swung wide open with their other drug candidate, and almost no one is talking about it. Let's be clear, the common belief about SLS, the story you'll hear, is that it's a binary bet. It's a classic online investment lotto ticket. The entire market narrative is focused on one thing, the upcoming Phase 3 REGAL trial data for their lead candidate Galinpepimut-S, or GPS, for acute myeloid leukemia. The expectation is that if this data is good, the stock gaps up to $10. If it's bad, it's a round trip back under $1. People see this as a pure gamble, something you buy on the Robinhood app or SoFi Invest and just cross your fingers hoping for the best. But that's where the story falls apart for me. That analysis is lazy. The reality is that Sellas is no longer a one-trick pony, and the market hasn't caught up to that fact. The company just spent the last few months delivering a stream of exceptionally strong data on its second asset, SLS009. Back in July, the Phase 2 trial for SLS009 in relapsed refractory AML met all its primary endpoints. It showed an overall response rate and, more importantly, a median overall survival in these incredibly sick patients that blew historical benchmarks out of the water. This isn't a future promise. This is real, positive Phase 2 data. Yet, the stock is still trading at $2.14 as if this major success, this significant de-risking event, never even happened. This brings us back to Friday's price action. That $2.14 close on 8 million shares of volume tells me the market is starting to wake up. This isn't the chaotic, low-float retail buying you see on Robinhood during a meme stock craze. This is heavy, sustained volume. It suggests institutional positioning. Think about it. This isn't Apple stock where you're debating iPhone supply chains and services growth. This isn't Nvidia stock where you're modeling data center growth and AI chip demand. And it's certainly not Tesla stock where the entire focus is on vehicle delivery numbers and new factory ramp-ups. This is a complex investment in clinical science. You won't find SLS sitting in a diversified Fidelity mutual fund or a hands-off Schwab Intelligent Portfolios account. An automated intelligent portfolio is designed to avoid this kind of single-stock high-stakes situation. This is a stock for self-investing, for someone managing their own individual brokerage account who is willing to read clinical trial reports and SEC filings. The high volume on Friday suggests that some of those serious investors, perhaps using sophisticated Fidelity trading platform tools or the Interactive Brokers platform, are looking at the same data I am and are accumulating shares ahead of the curve. Let's dig into that institutional idea, because this is where the reality really separates from the expectation. The most recent 13F filings from mid-year were fascinating. We didn't just see passive ownership. We saw massive increases in positions from some of the biggest managers in the world. BlackRock significantly increased its stake. Wace, a major global fund, established a huge new position. Morgan Stanley massively increased its holdings. These aren't retail investors chasing hype. These are the largest players on the street, and they were building positions. This tells me the smart money isn't viewing this as a simple gamble. They are looking at the math on SLS009. They are looking at the potential of GPS, and they are building a position at these low levels. This isn't a stock for a basic SoFi robo-advisor. This is a name that's attracting serious analytical firepower from people who get investment help from entire teams of PhDs. Now, let's talk about the bear case, the risk. For any company like Sellas, it's not just about the science, it's about the balance sheet. The expectation is that these companies are always on the verge of bankruptcy, constantly diluting shareholders to keep the lights on. The reality? Sellas is actually in a decent position for now. They raised $25 million back in January, and then, very importantly, they raised another $23.6 million just last month in September from warrant exercises. This is key. It extends their cash runway right through the most important catalyst on the calendar, the year-end data readout for the REGAL trial. This wasn't a desperate, dilutive secondary offering. It was a structured influx of capital, likely from investors who wanted to increase their position. This financial management is critical. It means they aren't being forced to make a bad deal or dilute at the bottom. This is a level of detail you absolutely need for online investing, a detail you won't get from just watching the ticker on your Fidelity mobile app. So, what is this all actually about? What does Sellas do? They are a clinical-stage biopharmaceutical company. They are developing cancer immunotherapies, which are treatments that use the body's own immune system to fight cancer. The first one, the one everyone knows, is GPS, Galinpepimut. It's a vaccine designed to target the WT1 protein, which is found on a wide variety of cancers. The big Phase 3 trial, REGAL, is for AML patients who are in remission. The goal is simple: keep the cancer from coming back. If it works, it's a massive deal, a potential blockbuster. And all of this ignores the value of SLS009, which would just be a massive bonus. But the second drug, the one the market is ignoring, is SLS009, tambiciclib. This is a different type of drug, a small molecule CDK9 inhibitor. Think of it as a drug that tells cancer cells to stop dividing and to die. As I mentioned, the Phase 2 data from July was outstanding. It showed it worked well in very sick AML patients, even those who had failed other treatments. This is huge. It gives Sellas a second, powerful shot on goal. It's not just Fidelity investing in one idea, it's two. This SLS009 pipeline, which is already validated with strong Phase 2 data, is why those analyst price targets are sitting around $7, reflecting a value far above the current $2.14. The company is even presenting new data on SLS009 at the European Society for Medical Oncology Congress, which is happening right now. This dual asset story is what makes SoFi investing in this name so compelling right now. It's not like buying Robinhood crypto and hoping for a tweet. It's about tangible clinical progress. This is the kind of stock that requires research, not just trend following. The SoFi Stocks platform might list it, and Fidelity Brokerage will execute the trade, but the story is buried in those SEC filings and press releases. This brings us to the future outlook. What are we watching? There are two immediate catalysts. First, the company is hosting an R&D day on October 29th. This is critical. The market will be listening for any new color on the SLS009 program and any updates on the REGAL trials timeline. The second and the big one is the top-line data from the Phase 3 REGAL trial for GPS, which is expected by the end of this year, 2025. That is the main event. Let's run the scenarios. Scenario 1 is the bull case. The REGAL data is positive. It shows a clear, statistically significant benefit in keeping AML patients in remission. If that happens, the stock will not be at $2.14. It will halt trading and will likely open north of $7, possibly over $10. At that point, the company is not just a research outfit, it's a pre-commercial company with a validated Phase 3 asset likely heading for a major partnership or a full buyout. And all of this ignores the value of SLS009, which would just be a massive bonus. Scenario 2 is the bear case. The REGAL trial fails. The data is negative. If that happens, the expectation that this was all about GPS will crush the stock. It will likely fall 70 to 80% in a single day.